is Tuesday, September 14th. It's 9:44 a.m. The market has been open here for about almost 15 minutes. At this moment, I'm looking for a long on the market, and I'm looking at this area here. We already had a slowdown. Looks like we're having another slowdown. My power direction, which is the auto indicator I use here, is showing me the potential for a long. And by the way, if you want to really learn about the master indicator that we use, request a 7-day free trial, and we will show you all the tools that we use that allows us to be consistently profitable in the market. It doesn't matter if you want to trade the TF, the ES, the DAX, the 10-year note. It does not matter which product you want to trade. It applies the same way to all of them. Our trading style or our trading strategies works the same for any product that you would like to use. So right now I have my power direction showing me diversions, a lot of separation, a lot of bulges, and which means that an impulse up is at hand. And so what we're doing here is taking a long, perfect timing, and now our boundary here. See, we use a 5-tick boundary. If he wants to come through this area, we're out. And then we'll just look for the next area. I'm looking for this trade to come up to this neighborhood to begin with, and then I'm looking for breakout. Meaning that we can go somewhere into this neighborhood up here. Our success is because we trade strictly technically, and no greed, no fear, no maybe, ifs, abouts. It's all about technicals. And to trade strictly based on technicals, it requires a special mindset, what we call mind over matter. You too can learn to trade and be profitable on a daily basis by trading strictly with technicals. If you are not familiar with the concept, and if you have been having all kinds of issues with your trading based on not taking trades you should have, exiting too soon, chasing the market. Like right now, a lot of folks would go ahead and they, for example, take a position here. And can it go from here? Yeah, I'm expecting to go up. However, this is not the place. To take a trade here, that means your stop loss has to be all the way down to here. So why use a point for stop loss when you can do it with just half a point? Or why use 1.5 points when you can do it just for half a point? The whole thing is that, getting up here because you think it's going up now, it doesn't mean you won't pull back. You want to learn to get in your trades on the edge. That's what you want to do. See, I'm still within the edge here. This would be another place. If it takes me out, I'm going long somewhere in this area again. When you trade with just 5-tick stop loss, we call it boundary. When your boundary is 5 ticks, you can have 1, 2, 3 trades that don't work out and still be profitable, because every trade we take, we do it with a calculation that the trade can run 2.5 plus points. Well, this trade here can run from this area, so we have 1, 2, 2.5 plus. And so even if you have 1 trade or 2 trades or 3 trades that you got in and it just didn't work out, if you stay consistent with the technicals, you're still going to end up being very profitable. I can see the market already telling me that it's going to go up here, and if it does not, the next one is going to go even higher. The power direction, what a wonderful tool. And the way we synchronize these in 7 different time frames, it really shows us the beginning, the intermediate, and the farther out where the market can go. So being in this trade, I'm here with total confidence because I know if not this area, it's the next one. Either way, I'm going to be profitable. Trading like this is awesome, to have the confidence that you know you're still going to end up being profitable. You know, it's really cool when you can sit back and you can know where the trades can come from and where they're going. And then even though one may not pan out, you can see where the other one is coming from or could come from. That's what we call precognitive trading. Now right here I have 100% run. So if I'm to look at this run from here to here, I got 100% run. So what the market normally does, it runs, pulls off, and takes off again, and repeats the same thing as it did the first time before the pullback. And so what this means is that over here the market can really slow down. And but there is much more. I need one more power direction here to lock in on a rail for me, and then I can see it go right to that little target up at the top there. And I'm doing this here with 10 contracts. It's a common thing. I trade 2 domes, sometimes even 3, but per dome I normally use 10 contracts. It's different accounts. We have many videos. I'm trading here with 2 computers right now, so the dome this time is the trading accounts. I'm keeping them in one computer, and the charts in another, and the videos here with the charts. I am not one to be I need to do some upgrades, or I need to do something else to keep enough energy going on the computer so there is no, see, I'm taking half off the table here. Half. So now, and my boundaries now is adjusted. If he wants to come through here, it's going to come down to here. So I got plus a tick. Actually, I got plus 2 ticks on the trading accounts. And right now, I have booked a 1.5. And this is 100% run. This is a congested area here, which would mean potential resistance. And so when you have your trading accounts, your charts, your videotape, everything in one computer, something freezes. Ay. So you see, I can walk away right now with a 1.5. And how long have I been here? A few minutes. And just walk away for the day. Of course, today I've done quite a bit of trading already too. But normally I trade 1 hour maximum. We still should reach. So now here was a run, pullback run. Here's another run, the pullback, and we should have another run. The market has a gap here from yesterday, and the market is going to come and close this gap. And it could very well be between today and tomorrow. $23.38. We should come at least to this area. We should come to this area before the market considers to really come down, if he wants to come down today. Should be in this area somewhere. So this is 647.47. 647.50. Yeah, that's that neighborhood I was talking about. Now, if the market doesn't come up here right now, if it doesn't come up here and it comes down to this area here or this area here, that's another strong long. Because what the market normally does is on a rundown, hits the 23, comes back to a deep retracement, which it didn't. So if it doesn't do it from the 23, it can do it from the 38. Doing it from the 38 then means it's going to go back up to the 50. Let me double check this. We got so close to this 38 that the odds are we're going to get over the 38. Don't use this bar here because this is what we call a lonely bar pre-market. So that bar is really not significant. Don't use the tip here because this is the pullback. You know, learning how to use the Fibonacci's, it's very, very important. Learning how to use the Fibonacci is very important. Let's see if the market wants to repeat something here now. Bounce off the 50 from here. For the whole run, it touched the 50, pushing back up. And from here is also bouncing off the 50, never close off over the 61. Understanding the MACDs, learning how to read the MACDs, the Fibonacci's, understanding Fibonacci's, learning how to use them properly. It's very important. We know how to use Fibonacci's, especially on these short-term runs. It's 10 o'clock, looks like we got some news. And talking and discussing this, I missed something here. And there is a potential of a sideways, and I'll show you that. See the way this is trailing here? This indicator here? That's what's giving us the sideways, and I wasn't focused on that. But I can get 8 out of 10. And the reason I don't get 10 out of 10 is because I missed something. We could be thinking about something and our minds could be going in one direction. We're not paying attention. And so the market always tells us what it's going to do before it does. It always does. And it does it before it actually takes that behavior. The market warns us about the potential sideways, about the potential long or the potential short. It warns us seconds, minutes before it takes place. The only way we don't see that is because we are too preoccupied with whatever, especially with money, trying not to lose money or trying to make more money, and of course if we are not mentally focused on what we're supposed to be focusing on, then how can we be profitable? Now I have a different pattern here. So this area, I did change it that time there, 647, so that's the 38. It did went through the 23 here, and before it went through the 38, it did push back for a deep retracement. So now 647 from here, instead of from here, 647, let's take a look. We should have another snap back up. I am going to close one account here. I'm going to exit everything. Have a wonderful day.